And indeed, Jeff, they also, listen, Crocs, which you could call its nearest publicly traded competitor, which went public all the way back in 2006, by the way. Crocs down 21% year to date. Maybe that's not helping. What do you make of it?
Well, I think it was disappointing, Kelly. And at the end of the day, Birkenstock is a 250-year-old company. So the investment bankers should have had a better measuring stick. This isn't some tech company that's negative EBITDA. This is an actual company that has been making money for quite some time. So to see it down 12%, I think that speaks louder to the IPO market, which I know it's still unfreezing. It's kind of like Austin Power trying to find his mojo. But here we are, with some big monies coming out. And I know when we compare it to 2021, it pales in comparison, right? That was one of the biggest years. We saw $80 billion raised on a market cap about $315 billion in over 200 deals. So here we are just trying to get over $10 billion in raising money in the small amount of deals for 2023. But I really think this is going to hinder the appetite. It's going to push some of the bigger IPOs from Q4 out to Q1 next year. And yes, we know the headwinds here. The investment bankers should have measured all this. We know higher interest rates. We understand the appetite is not there like it used to be, but this should have priced better, Kelly, bottom line.
It's also, I was reading through some commentary from the weekend. Michael Hartnett at Bank of America pointing out we're seeing some of these bifurcations in the market where you have retail stocks pricing in a hard landing, but other parts of the market not necessarily. And is it just unfortunate timing that Burke is more or less just a retail name for a very challenged space right now?
Yeah, I think that's a great point. But on the flip side, look at ARM. Why is ARM down 12% since its IPO, right? That's you talk about the British chip maker for the phones, that should be moving higher. So I think the overall, this is normal, and I don't think we should be too alarmed. I'm not trying to press too hard on the Birkenstock being down 12%, but I think this is just part of the unthawing process because we saw the door shut on IPOs in 2022. So I think it's going to be okay. We're going to see consumers still have an appetite, but right now there is a lot of uncertainty with the Fed policy, which is absolutely impactful on IPO investor appetite.
They even had a Barbie effect, Leslie. You think, come on, like the Burks, I think, were in the. They've only been. Al Catterton did the buyout a couple of years ago, around 4 billion euros. So if it goes public at 7 or 8, it's still not a disaster from that point of view. And Crocs is only a $5.5 billion market cap.
Yeah, you'd be hard-pressed to find returns of about 80% upside from just 2 years ago, especially from 2021 to today. So this would absolutely be a win for L. Catterton. Now, they're still going to hold about 83% of the company when it goes public. But we spoke with the managing partner there who ran this deal, who led this deal, had a close relationship with the company, has a close relationship, said that their intention is to still hold about 68% for the foreseeable future. So this is still going to be a significant partnership for them and almost a 2-handle or a 2x return on this investment made just a little over 2 years ago. And their perspective is basically, because I asked him, why now? It's only been 2 years, and you seem pretty steadfast in getting this thing public, given the prospect for a government shutdown that almost derailed your roadshow, the events in the Middle East over the weekend and beyond that created this layer of uncertainty in the markets, and still you moved forward. And he basically said, look, good companies can get out whenever, and they believe in the long-standing value of this brand, which dates back 250 years.
Jeff, we'll also be watching, like you said, for the inevitable kind of what will this mean for the IPO pipeline, whether or not it's just a case of, look, it's a German company, it's a private equity backer, it's a retail, I think most of the stuff in the pipeline is not that.
No, that's right. But at the end of the day, I think investors are just become more sophisticated. So don't be surprised, Kelly, if you see some big institutions laying in the weeds as they're pricing this. You could see Birkenstock trade back over $50. There's so much volatility on this initial emotion. So I wouldn't discount the fact. But at the end of the day, I think you have to look at a company very differently, a very different lens than some type of tech company coming out later in the year.
No, fair enough. And I was actually going to ask if you think, often it can be the case that a more muted IPO is a better IPO because you don't want to buy something as the broad public investor once it's already up, 40% from the IPO price. But to your point, Jeff, it's not like the more muted openings we've seen for ARM and Instacart have ended up being all that great either. Leslie, I'm hearing some bells over there. What's going on? Are we open?
We are officially open, currently around 4160, down about 10% at the open. And you bring up a good point, Kelly, is kind of, do you want to see a huge pop on day one and risk that momentum turning sour, or more of a muted open and seeing declines on the open? What happens psychologically there?